It's Adil bringing you a review of the FTSE 100 weekend analysis for Monday's trading starting the 21st of July 2014. Okay, so I'll bring you an intermarket analysis perspective. Let's try and cover the fundamentals first and let's see exactly what's going on. Okay, so basically the background, we have geopolitics. Okay, geopolitics rule the roost. Okay, literally right now we have geopolitics ruling the roost. We did have a short squeeze late Friday, obviously based on light volume and Miss Yellen's algos going over into overdrive, trying to protect the markets from obviously crashing and maintaining the uptrend because of the excess liquidity that they've been pumping, and obviously is now coming to an end. The last thing they want now is the stock markets crashing whilst they are reducing QE, so her algos will be into overdrive. Okay, preventing any correction from occurring. Whenever you have a bearish pattern, surprise surprise, it happens to break. Even with QE it broke, and even without QE it's breaking. So that basically leads me to conclude that literally these markets are manipulated to the teeth, okay, right to the umpth degree. Okay, so it's frustrating, don't get me wrong, it is absolutely frustrating, especially with regards to Friday. I mean, I managed to nail 217 points last week, so back-to-back 2 plus 200 point weeks, so that's good. The week before, obviously, I was struggling, as you all know, in my videos. It was very frustrating to read the markets, etc, etc, etc. And even now, late Friday was very frustrating too, because you had geopolitics, so you've got Iraq, a situation with ISIS taking control. Obviously, that creates uncertainty with regards to the oil pumping out the region. Okay, that obviously is affecting oil prices higher, as we know. Cost push inflation. If you've studied economics, you'll know obviously that is it's quite dangerous. So you tend to get a supply side shock, and that itself can hurt the economy, especially when everybody's concerned about interest rates. So the last thing you want is a commodity bubble or a commodity price rise. That obviously affects inflation. Inflation rises, and again, interest rates are talked about. So in the UK, interest rates are a very sensitive topic, especially with regards to Miss Carney's confusion, blunder, what can we say, inconsistency, lack of credibility, etc, etc. So basically, right now you have the situation in Iraq out of control, the situation in Israel and Palestine with regards to the obviously killing of innocent civilians. Really, I mean, 80% of the individuals that are killed out of the 300 are civilians. So how they can call it Operation Defense is beyond me. Okay, so basically you've got that massacre occurring, similar to Shibra and Atila. I think the last time the Ariel Sharon went in and he massacred loads of innocent civilians. So there's a way in which you conduct or wage a war, and the way in which you can obviously attempt to defend yourself. Okay. And especially with the current situation now, with the precision and the accuracy of these missiles and these ways of attacking your opponent, it's a shame really that you have at least 80% of the individuals that are killed that are civilians. And just take a look at the example of the children that were killed on the beach. I mean, it's sickening. Let's just pray that everything is back to normal, that we have peace and tranquility in the world. It's a shame. It's just individuals with distorted views of the world that are obviously ruining it for everybody else. That's the way in which I look at it. Okay, and the best example is for a football hooligan. That's exactly what they are. The game of football is beautiful. Everybody loves the game of football. We respect the game of football, where two opponents meet, and it's a beautiful game. It's a beautiful occasion. It's a beautiful sport. But yet you have a few hooligans, a few bad apples that spoil it for the rest. Okay, so situation in Iraq is obviously out of control. Israel, Palestine, as we all know. Situation in Ukraine obviously is the main headlines. I mean, it's the fact that the Ukrainian situation is overshadowing the Israel and Palestine situation, which again, it's not a surprise that the Israelis decided to go into Gaza because they realized that the world's media was paying attention to the situation in Ukraine. So it's a real conundrum right now. It's absolute chaos. But right now, obviously, the US has confirmed that it was a pro-Russian rebels that shot the plane down. So again, that's going to have consequences. Again, that's going to create uncertainty, political uncertainty, socio-economic uncertainty. So geopolitics rule the roost. Whenever you have geopolitics ruling the roost, what happens? You should have a US dollar rally. The US dollar should be strong, and that should create fear. The yen should rally. The Swiss franc should rally. Obviously, the euro now should technically rally. because obviously it's become a safe haven. But given the fact that the Ukraine situation is hurting the European Union, obviously that's the reason why the euro is obviously being hurt. Okay, so basically, overall conclusion: dollar rally, gold rally, oil rally. Okay, that itself is a catalyst to cause a sell-off in the stock markets, regardless of what the technical situation is. Okay, because fundamentals always trump technicals, because 89% of the traders out there are fundamental traders. So yes, we look at our technical charts to guide us and alert us, etc., etc. But obviously that has to be in conjunction with fundamental analysis and intermarket analysis. Okay, so you had the Asian markets obviously down overnight, so therefore the sell-off should continue, especially after you had a dead cat bounce, and then obviously the selling should resume, especially going into a long weekend. So as you can see here, this is a prime article: stocks are ignoring reality of MH17. Opinion fallout may soon become too great for investors to hide from, which is true. Okay, so Miss Yellen's algos on a Friday when there's light volume. How successful are they? Very unsuccessful. It's a temporary fix. It knocked out a few stops. Options X as well. Bear that in mind. There's games being played there. So I'll be short come first thing Monday. I'll be short. Why? Because fundamentals confirm I need to be short. Okay. So the states say the incident isn't just about the deplorable loss of 295 lives. May they rest in peace. It's about a new eruption in global terrorism. Agree. A critical moment between the United States and Russia. Again, Cold War Part 2. Okay, East and West, it is the most dangerous geopolitical moment since the financial crisis and market crash of 2008-2009. That sums it up in that one paragraph. That sums up the concerns that should be overwhelming the stock market. Okay, so I remain in the bear camp. Come Monday, I will be going short. Okay, even though I did get stopped out my Nasdaq and FTSE shorts on a Friday, as subscribers know, for -60. That doesn't change my view one bit whatsoever. Okay, come Monday, I will be short the US markets. I'll be short the European markets, and looking for further downside. Okay. Oh, excuse me. Okay, so yes, that's basically the situation that we have now with regards to the UK economy. Okay, UK economy is in the right quagmire. Why do I say that? Because you have high inflation and you have rising employment. Okay. So high inflation, rising employment. What do they both signal? Interest rate rise. Okay, interest rates rising generally signal on the top, as Mr. Murphy will state in his book, and obviously with the commodities obviously moving higher as well recently, that generally signals the top. That inflationary trade is out of the equation. The free money is about to come to an end. The stock market has to face reality, has to stand on its own legs. The patient is off the morphine. Reality kicks in. Reality is not that great, and the stock market starts to retreat. Okay, that generally is the top of a excess liquidity driven rally. Okay, so let's have a look at the technicals now, if that's a backdrop. Add in the fact that European Union is in a real pickle as well, given the fact that German data, which was the only bellwether in Europe, is now starting to come out with weak data. Obviously held European Union higher, and that is now coming to an end. Okay, so Mr. Draghi will not press the QE button. Okay, he wants to insist on negative interest rates. Again, I'm not sure how that's going to help, given the fact that you've had so many other obviously Operation Twist and so on and so forth about pumping excess liquidity into the system to encourage individuals to borrow to one another and obviously get investment spending, which eventually leads to employment obviously being revived. That obviously hasn't succeeded, so the definition of insanity is doing the same thing over and over again and expecting a different result. Okay, and that's exactly what we're looking at right now. So economically it doesn't look good. Geopolitically obviously it doesn't look good. Socially it doesn't look good with regards to Ukraine. Sanctions on Ukraine, splitting the region, etc., etc. So, and given the fact that Germany obviously exports to Germany exports to Russia, around 1/3 of his exports go there. That obviously doesn't bode well, and that's the reason why you're feeling the pinch in Germany. So if Germans can't hold European Union up, who will? France is in a real, it's in a cancerous situation where it's decaying, politically uncertain, economically uncertain. So this isn't looking good. So the two major economies in Europe are not looking very good at all. And the economy in the UK is now grappling with higher interest rates, which is going to hurt disposable income going forward. again, the situation does not look very good, especially with the end of QE. So excess liquidity can't save us anymore. Okay, so that's basically the situation that we're in. So overall, long term, it looks pretty dire. And if you are a long-term trader, then you certainly want to be a bear. Okay, so let's have a look at the situation in the daily chart now. Let's go to technicals and let's see what the technical charts tell us. Okay, so technical charts are telling us a slightly different picture based on the fundamentals. Okay, so we have this key trend line here. The key trend line held the 200 MA again. Okay, putting a bottoming tail, although it's a bear flag situation. Okay, it's in lower lows, lower highs. The trend remains down. We have the Fibonacci retracement here of well, I expected the 50% to hold and obviously lower as well, but we retraced back to 61%. 61% the market sold off. We are in this inside bar. We did, obviously, if you look at this candle here, this is the inside bar. We did go below it due to the obviously Ukraine emotive sell-off. We did recapture it, so that is quite impressive. Okay, that move there is quite impressive, but again, it's on a light volume Friday, so given the fact that the US market short squeezed higher, that's what caused the UK markets to obviously follow suit. Again, we'll have to see, especially with regards to Russian rebels firing the rocket. If it wasn't the Russian rebels, if it was the Ukrainian rebels or pro-Ukraine rebels, then obviously you could say yes, Putin now has the upper hand. But it was pro-Russian, so certainly bearish, and obviously Israel, Palestine, as we all know. So basically, from my perspective here, we have a bear flag situation, and we have lower lows, lower highs, and I expect the markets to obviously dive and continue to move lower. Okay. That's basically what I'm looking for. Once this trend line breaks, then basically the floodgates open. Okay, floodgates open down to 6,500, etc., etc. Okay, that's basically what I'm looking at from that perspective. Now, the weekly chart, as we all know, has printed a bearish engulfing candle. So obviously that again itself is a bearish sign. Okay, so that's the best way of interpreting that. Okay, so and this is a key trend line that obviously has been holding, and we're looking for a potential consolidation. And bang, down we go. And we look to test this key trend line here. So that's the situation there on the weekly chart. Okay, it certainly doesn't bode well, especially with a weekly bearish engulfing candle. Okay, just bear that in mind. Okay, so again, daily chart, we did have a bottoming tail, but again, how much conviction, how well can that hold? Okay, so we'll see come Monday how well that holds. Obviously, if buying power still is there and the bulls still want to push this market higher, then obviously I'll be willing to change my bias and expect a potential bull flag situation. So this part here will obviously break higher. Again, there's several scenarios that have to occur, prerequisites that have to occur for that pattern to fail, or for that pattern to occur. But for now, I'm going to go with the bearish pattern, given the fact that geopolitics rule the roost. Okay. Now let's have a look at the FTSE 250 now, see if we can get guidance from there. FTSE 250 again putting a bottoming tail. Again is holding this key trend line. Again is holding this support level. But what pattern can we see? We have a H&S formation. So could this be the catalyst that will break the back, or break the camel's back, as they say, and literally down we go. Okay. So this is going to be intriguing, very interesting. Now the clue will be found in the US markets, whether the US market can put in a reversal or put in the top, and that itself will confirm the European top. Okay, so let's have a look at the FTSE 350 now. FTSE 350 again, bear flag situation, very similar. Held this key trend line here, as we can see, red trend line seems to be holding well. But obviously we've got lower lows, lower highs, so the bias remains on the bearish side. Okay, until obviously innocent, until proven guilty. Okay, that's basically where we are on the larger time frame. So let's have a look at the smaller time frames now, see if we can deduce anything from there, see if it can give us some sort of indication and exactly where it wants to go. Okay, so 60-minute chart, you have a H&S formation. Basically that's basically what you have, a potential continuation pattern here. So there we go, obviously reverse, pulling lower. Okay, so that's basically what we're looking at here. You have the 200 MA resistance above, and then you have horizontal resistance. So horizontal resistance is at 6760. You have resistance at 6770, and then obviously ultimate resistance at 6790. 6790 remains a resistance zone for now. Okay, so you've got a trendline resistance, so 6770, 6760. That's exactly where I'll be looking to potentially place my short, and a stop loss above the 6800 level, just to be on the safe side, just in order to prevent any fake outs, any stop loss hunts from occurring. Okay, so and I'm looking for a potential downside move, potential going down to around the 6650 level. Obviously I react to what the market tells me. I'm a day trader. Obviously, if the situation changes and Nasdaq makes a new high, the Dow makes a new high, then everything is a reset, and the bulls are certainly gained the upper hand. I'm not an individual who likes to fight the bulls, nor do I like to fight the tape. I'll be more than happy to switch my bias. It doesn't mean put aside my ego, put aside my analysis for today, and then I have to review and reanalyze. Okay, and that's what day trading is all about. Okay, so what do we have here? So 10-minute chart, obviously horizontal resistance here, previous support equals resistance here, 200 MA resistance here, and obviously we have diagonal trendline resistance as well. So 6750, as we know, 6750 is a solid resistance zone. If that breaks, then you've got horizontal resistance around the 6760 level and the 6770 level, which I've already indicated. So that's basically where we're at with regards to the 10 minutes chart. So conclusion, bearish, okay, into resistance. So I'll be looking to short the FTSE come Monday. Okay, folks, so I think that's a wrap. Risk on, risk off, wax on, wax